Hello, welcome to another podcast of Master Investors Company. Today's episode is called What is Financial Independence? And very simple, we can achieve financial independence by three different things. By number one, acquiring cash flow and assets, and hopefully we are increasing our financial education to the point that we are using debt and we're okay with good debt. There are two types of debt: bad debt and good debt. Good debt puts money in our pocket. Bad debt takes money away from our pocket. And when we use good debt, the reason why we can get wealthy for free legally is because when we use debt, either from a bank, from a private institution, from a private investor, or whatever it comes from, debt is always tax-free. And so money is created with debt. So that is why it's tax-free. In the ultra wealthy, we use debt to acquire all of our assets, because at the end, it's all about using OPM, other people's money, and OPT, other people's time. So that's number one. Number two, the cash flow from our assets pay for our living expenses. And so once our monthly cash flow from our assets is equal to or greater than our monthly living expenses, then we are financially free. And that's truly what financial independence is all about, is having enough cash flow from our asset column that exceeds our living expenses. And our assets will continue to cash flow in any type of market, and they are working hard for us. Okay, so understand there are three types of income in the money world. The first one is earned income. 90% of the population knows and works for this type of income. Is when you have a job and you receive a paycheck based on the time which you trade to that company or that boss that you're working for. And so you're trading time for money, and that is earned income or active income. Portfolio income is the second type of income that exists, which is better than earned income. However, instead of exchanging time for money, portfolio income is made through capital gains. When you buy something low and you sell it for a higher price, for example, a stock. However, this type of income is taxed at a higher bracket than the ultra wealthy's type of income, which is number three, is passive income. And this is what Master Investor is all about. We invest for cash flow. We are an investment management company, and we also have a digital financial department where we, like this, teach other people high quality financial education. However, we're always investing for cash flow. A master investor will always invest for cash flow, for passive income. Okay, cash flow is passive income, and that is when we have a true asset in our asset column that is running on its own and is either selling a service or selling a product and is working hard for us, and we don't have to be involved in the transaction to make the business work. It's working for us, where there is maybe a real estate property that it has tenants in it that is running on its own, and it's creating passive income for us every month, every week, every day, throughout the entire year. It doesn't matter whether the economy goes up and down. We're looking to add value into the properties or into the asset which we acquire with OPM, with other people's money. So that is what truly financial independence is all about. It's about building our asset column. And every time we look into an investment, we are doing so with the eyes of an entrepreneur, because every investment is a business. So when we speak about investing, we're going to be speaking about business. The more we know about business, the better investors we become, and the more cash flow we will get from each investment, because we are investing for passive income, for cash flow. Okay, and it's all about building our asset column. And each investment has its own financial statement. Just like we have our own financial statement, our own asset, liability, income, and expense column, an investment also has a financial statement, which it has an income, has expenses, has assets and liabilities. So an asset can have assets inside the asset. So an investment is an asset, and we can add value by adding assets into that asset. So I'll give you an example. If we have a property, and let's say that property has 24 apartments, and in the 24 apartments, when we acquired the property, there weren't any washers and dryers in each unit. So when we get a loan from the bank, part of that debt we would use to acquire washers and dryers and put them into each unit, and the tenant will pay by us increasing the monthly rent, because now they have an incentive. They have a washer and dryer. They don't have to walk down the street to wash their clothes. So they're okay by working a little harder to pay an extra $150 per month for the washer and dryer. At the end of the year, we have paid back the washer and dryer, and ultimately the entire loan that we acquire based on the NOI, the net operating income of the investment, we will pay that loan back, and we will still be able to hold the asset for long term, for cash flow. That's what we're always looking to invest, for cash flow, okay? So I hope you enjoyed this episode. Leave us a comment below, share it with other people, and join us in all platforms at Master Investor. Look for the logo. Welcome to the community. And check out our digital courses at www.masterinvestor.education. New book coming out this month, and we're happy to be here providing high quality financial education. Remember, it's all about increasing our financial IQ through financial education made simple, and focusing on our asset column. It's about building our asset column with cash flow and assets. Let us know in your comments below what you think of this episode, and I'll talk to you on the next one. Stay great. Bye for now.